All-time highs, folks. New all-time highs in the public count. I hope your portfolios are reaching all-time highs out there as well. If your portfolio is reaching an all-time high, let me know in the comments section here today. And I usually say smash the thumbs up button for me, but smash it for yourself, guys. Absolutely phenomenal. Some pretty incredible moves out there. Definitely a lot of money to be made. Huge day here today, okay? A few things I want to discuss in today's video, okay? First up is I saw this post from me, Kevin, on his X, and this was posted yesterday. He said, sell stocks, take a vacation until early November. I want to talk about this a bit. I love kind of speaking about some controversial takes and those sorts of things on the channel. And this is definitely a very controversial take, certainly, right? And so we'll speak about, do I think this is going to age like fine wine? Do I think it's going to age like milk? We'll speak about that. We'll kind of talk about that a little bit in this video. And we'll also speak about why this is a very tough call to make in regards to this. Nike, this stock I've been buying basically every single week for the last several months now at this point in time. And it's up big after hours, essentially, on a huge announcement. We'll speak about what that is. How do I view this for Nike moving forward? We'll speak about that, okay? Additionally, I'm going to show you the entire $2.4 million public account in this video, and we're also going to speak about how I feel about each and every position in that portfolio going into now a rate cutting cycle, right? So we'll speak about that in this video here today, okay? I got a lot to get through in this one. Appreciate y'all joining me. All I ask you is, are you subscribed to the channel? If you're not subscribed to the channel, make sure you're subscribed here to the channel. Appreciate y'all being here as always, okay? Alrighty, so let's start out with the Kevin call here. Sell stocks, take a vacation till early November, all right? So first thing is, this is kind of the easy call to make on the market, I would say. And I posted this back on September 6, 2024, obviously, this year. A couple weeks ago in the private group, I said, can't read too much into this stuff, but it does tell you a lot about what the market usually does. We are the red line, so we're the red line here, okay? So typically what you see in an election year with an open field is the market kind of tanks, honestly. In September and October, you bottom out the market kind of right around election time, roughly, and sometimes you even have a double bottom into November, essentially, okay? And so, in also the last 2 years, we had a very similar phenomenon. Last year and in 2022, we saw the market kind of tank in September into October, and then around mid-October to late October, market bottom starts heading back up. So we saw this in the past 2 years. Additionally, just based upon history, this is what usually happens. This is normal, right? So when Kevin makes this call, which is obviously a very short-term in nature call, right? It's not like it's as controversial as it might seem, given the fact that typically, like, the easy call to make is stocks are going to go down in September, especially in election year, right? So this would be normal. And a lot of people are banking on this. You got to understand, it's not like Kevin's the only one banking on this. I can tell you there's a lot of people that have sold out of the market over the past couple months and basically have been banking that the market's going to go down in September, October. They're going to approach back into the market in November. And then after the election, the market takes off, boom, 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 right? And a lot of people are feeling like if a certain candidate wins, the market's going to go extra risk on, okay? You know who that is. And so that's what a lot of people are banking on here, right? I can tell you it's not only Kevin. He's not the only one banking on this. There's a lot of people banking on this, right? Now, first off, today's September 19th, and the stock market's at all-time highs. The S&P 500's at all-time highs. Now, technically, we should not be at all-time highs if this was normal, right? Because normal, if you're around this time, the market should have already started to tank quite considerably. Sometimes you get a bounce back, but technically, we should already be down quite considerably already. We're at all-time highs right now, which already means we're not in a normal year. This is an outlier, freakish year, right? Even if the market was to tank from here, it would already have been an outlier year because you don't usually reach all-time highs on September 19th. That's not a normal thing whatsoever, right? Given the usual seasonality in an election year. So we're already in an outlier year given this. Additionally, this was a dramatic fall here. From kind of where we were at in mid-July to where we were at the beginning of August, that was a dramatic fall in the S&P 500. I mean, we fell 500 points roughly there. That's not a small amount. That's a pretty large amount in a short amount of time. That's in a matter of like 2 weeks, roughly 2 weeks, 3 weeks, falling 500 points in the S&P 500. It's no joke. That's a holy smokers. So this was a dramatic fall. That's not normal, right? You don't usually get that. I mean, look at this here. So if we kind of compare right about here would be mid-July. You might see a sell-off, but not that dramatic. That was an extremely dramatic fall here, right? So this is another kind of proof point that we're in a weird year. This is very outlier-ish, very kind of strange situation here, right? Now, additionally, you could look at this, and we've had two major dips, I would say, in the past, we can call it, 30 to 45 trading days, right? Two major ones. This one here and this one here. So this is the thing. Everybody knows. This chart I just showed you right here, no one's in the market with any major money who doesn't know this. Everybody knows this who has major money. When I say major money, I'm talking about millions, or they manage hundreds of millions of dollars, billions of dollars. Everybody knows this, right? Every algorithm knows this. Everybody knows this. Like there's no secret, right? And so given that everybody knows this, and we're in an election year, I mean, you could make an argument that maybe people try to front run the weakness of September, October. So they kind of thought, you know what, September, October is going to be ugly for the market. Let me go ahead and get out. And so right here was a perfect excuse for a lot of people to sell out, right? You had the Japanese yen trade situation happen in this amount of time as well. So you had a lot of people that just had an easy excuse to say, you know what, let's go ahead, let's roll out of this baby now. I want out way before we get essentially to the September timeframe, right? And some people might have done that there because they're figuring August, a lot of people were going to sell, right? Then we have the incredible bounce back. And then you might have the late people to the game that say, okay, we're going into September. It's going to be weak. Rate cuts are going to come, not going to be a good thing, blah, blah, blah. And so you have a bunch more selling pressure here. And now we're at all-time highs. So these two major dips here, it could be a situation where people said, I'm getting out now. I'm trying to front run this. Given that everybody knows September and October is very weak in election years, right? So that's something you got to consider here. Additionally, I took this screenshot back on September 3rd, and I kept it on my iPad just for the mere fact that I want to see if he ended up being correct or not, because Tom Lee makes a lot of calls. Tom Lee, when on CNBC, very first trading day of September, was at a bearish take right off the bat, because Tom Lee is usually known as like a perma bull, right? And he was very worried going into September, right? He's saying investors need to be cautious the next 8 weeks. Tom Lee, Mr. Permabull, comes out and says you need to be cautious. People start saying, oh my gosh, what's going on here? Like people get worried when they hear a Tom Lee come out and say you need to be cautious, right? And that clip of him certainly went viral all over the place, and people got concerned, right? And sure enough, that actually lined up perfectly with this sell here right at the beginning of September. People got very, very scared, right? So when you have even a Tom Lee saying be cautious, be worried, I mean, that just shows you how many people really concerned about weakness in September going into October, right? So that's a little food for thought in regards to that. Now, here's the deal. If you're going to get this market down, you got to get the big dogs down. There's no way you can get the market down without getting the big dogs down. You have to get the big guys down. The big guys, Apple, Microsoft, nvidia, Google McDougal, Amazing's on, right? You got to get Meta down. You got to get all these big dogs down because these are the biggest weights in the S&P 500, the biggest weights in the NASDAQ, the Qs, right? So how do you get these guys down? This is a very difficult thing to do. The problem with Apple and trying to get Apple down, and believe me, it's a hard stock to bet against, is people just keep kind of throwing out the super cycle. The super cycle's coming, right? And so even if it doesn't happen this year, people are going to say next year is going to be a super cycle in iPhone. So they just kind of keep kicking the can down the road, kind of like the recession crowd kicks a can down the road. We're going to have the big recession, right? They just keep kicking it. That's a super cycle for Apple. And everybody so loves the services business that people don't mind throwing a 30 PE on it nowadays. And Apple, was always like, that would be an insane valuation, a 30 PE for Apple. But nowadays, people just are happy to own their stock. And so you continue to have that. Microsoft has such a solid business. That's just a hard stock to get down, man. Even in 2022, even look at Microsoft in 2022, how well that stock held up, considering the NASDAQ was getting wrecked, right? A lot of tech stocks were down, 50, 60, 70, 80%, and Microsoft held very well, I gotta say, in 2022. It was incredible. So it's such a solid company. It's a hard stock to get down in any major way. NVIDIA, I'll be honest with you guys, NVIDIA already went through a big worry storm. I would say over the past month or so, it went through a lot of the anxiety, the worry about, AI demand's falling off, it might fall off, what's the payback of this? Everybody's been asking those questions like insane for the past month, so you kind of already went through this major worry storm around nvidia. And if anything, it could build back stronger now about like, oh, people are too worried, 2025 is going to be a banger year, you got to be in this stock for 2025, right? And so that's something to keep in mind. To get nvidia down more, it's a little challenging here, right? Google's a deal right now. I got to be honest, I don't personally own Google stock, but there's no doubt, looking at the valuation of Google, it's a buy right now. So to get that one down, it's possible, but it's just difficult. Amazon's a deal right now. A deal, a steal deal. So Amazon, could you get it down? Possible, but it's difficult to get that one down. Saudi Aramco, here's a deal. There's really only upside for oil from here. I mean, this is one of the worst years I've seen for WTI, considering it's not like, we have some insane unemployment rate right now, and yet oil's just been horrible. If anything, I'm looking at upside for oil price over, I would say, the next 12 to 18 months. And so that should bode very well for Saudi. If we're talking about Meta's a deal. Is it possible to get Meta down? Sure, but it's tough given the valuation of that company. Berkshire Hathaway is cash loaded to the sky, and Berkshire's biggest investment is Apple. So if Apple stock's not falling, and Berkshire's looked at as a cash loaded beast, that whenever the next big crash comes in the market, Berkshire's set up so well to take advantage. That's a hard one to bet against right now, because a lot of people are saying, I would love to be in Berkshire. They're loaded with money. They're making so much money. And whenever the day comes that we do have the next big stock market crash, 30, 40, 50% S&P, Berkshire is going to be able to load the boat, right? So that's another one that's also kind of difficult to get down right now, right? So that's just something to kind of factor in here. Additionally, Tesla's one of the biggest market caps. We got the 10-10 event coming. Tesla's about a $750 billion market cap, so a massive company. And the stock's down about 2% for the year. But if I had to guess, does Tesla go up or down over the next 3 to 4 weeks? My guess would be up, just to be quite frank, over the next 3 to 4 weeks, given that there's going to be a lot of hype and excitement coming about the 10-10 event. There's going to be a lot of rumors you're going to hear. Some might come true, some might won't, But anytime Tesla's a big event, there's a lot of hype and excitement that starts to build as you get closer and closer to the event. Now, after the event, the stock could sell off big time, okay? And it's possible stock could fall 10, 20, 30%, regardless of what they show off, starting within days after the event. So that's something to keep in mind. But leading up to the event is a very hype and exciting time. And so, it's difficult to even get Tesla down in the short term, right? So it's just kind of something to kind of keep in mind here, right? Now that goes into the famous saying in the market, time in the market beats timing the market. It's absolutely the most true saying, right? And that's that. At the end of the day, you got to stay invested. You got to stay invested in the greatest companies. You got to stay diversified in this, right? And that's what you got to do in the end, right? Now, if you really felt like there's the big recessions here, you got to keep in mind that's not even a timing game. You're not going to be able to like flip this and get out of these stocks and then back in if you feel like there's a big recession coming, right? Because here's the deal: if there's a big recession coming, we're going to be down for 1 to 2 years at least, right? Like that's what happens. So if you're trying to play this timing game because you think you're going to be able to get out for the next month or two and then back in come November, I think that's just a losing proposition, because then you're just kind of banking on I don't know what, like just a typical seasonal weakness, right? If you feel like, I'm getting out because I feel like the big one's coming, the big recession, we're going down, baby, great financial crisis, unemployment rate 10%, well, then you need to be loading up on put options if you really feel like that, if you're really that convinced. And then in that case, you would need to, be out of the market for several years. So like, it doesn't make sense to kind of play this like in and out and those sorts of things, right? And so, with Kevin kind of making this call, I think, it attracts a lot of attention and coverage and those sorts of things. But sometimes I wish, he would just like stay away from a lot of this. I don't know why he feels a need to do these sorts of things of like, I'm getting all out, I'm getting back in, and he knows, time in the markets, it's an impossible game to play, because then once you get out, all you keep thinking about is when I'm going to get back in, right? It's an impossible thing. And, back in 2021, I would say all of us were making a lot of clownish decisions. We were buying a lot of, clownish stocks back then in bad companies, and it was just a clownish time, and you're getting in, getting out, and those sorts of things. But here we are, we're going into 2025, and I feel like we just got to move past these kind of like rash decisions of like we're all out, we're doing this, we're doing that, and just, stay diversified, stay in great companies. If, you get opportunities to buy great companies at great prices, as long as your income and expenses in a great place, you're always able to take advantage of those deals, right? And so, I don't know, man, it's a little crazy in regards to that. But like I said, Kevin's not the only one doing this. There's a lot of people. I'm telling you guys, there's a lot of people that are doing exactly what Kevin's done here, okay? A lot of big money too. Now, I posted this last night in the private stock group. I said, so everyone has assumed the market is going to be down, September, October, and then up after the election. And so fascinating, like how many people are convinced of this, right? And it might come true, could come true, but it's a lot of people are convinced of this, right? I said the max pain trade is as follows. 1, the market flies over the next 6 weeks. 2, shorts get wrecked the next few weeks because there are a lot of people shorting stocks out there buying puts, assuming that September, October are going to be ugly. So you had a lot of people basically buying put options that are expiring end of October, kind of thinking, we're going to tank this baby. I'm going to be able to get out of these, make a bunch of money. A lot of people shorting, right? 3, sideline money gets pissed that the market just keeps going up, and they end up FOMOing into the market in the end of October, beginning of November. Election gets over. Right after, the market tanks regardless of who wins. S&P drops 15 to 25% over the next 4 to 6 months. Everyone leaves pissed. That would be max pain on all participants who are trying to play the game of time in the market, right? Because let's be honest, if you really want to I think honestly everybody really wants the market lower short term. I think that everybody does. I'll just be quite frank with you guys. Everybody does. I mean, even longs like myself, I would love this market lower. Like, why? Well, I'm buying every single week. I'm buying stocks every week. I would love the market lower. Then you have all these people that have went to the sideline, playing the timing game, figuring September, October is going to be bad. I'm going to be able to buy stocks back for a lot cheaper prices, right? So you have all those folks over there that are like, come on, man, send this market down. And then the more the market goes up, the more anxiety those people have, like, what the hell's going on here? And keep in mind, if you're on the sideline, the more the market goes up, the bigger you're going to need a drop for it to even have made sense, right? So let's say S&P goes to, 6,000. But then after that, it drops to like 5,750. Well, if you sold out at 5,600, you're still buying at a lot higher prices, right? Than where you sold out. So this is just a little food for thought in regards to that. And then the shorts, certainly they're banking that the market's going lower short term. So everybody wants the market lower right now, right? And when everybody wants something in the market, do you always get it? That's a question for you. When everybody wants it, everybody wants this market lower. The longs, the sideline money, and the shorts. Do you get it? I don't know about that, right? I don't know about that. We'll see. So that's that situation, okay? Just, stay invested, stay diversified, great companies. If you get dips on them, buy. If you got a lot of money, learn to hedge. You can play a few hedges out there and those sorts of things to cover yourself in the back end, right? Keep some cash around. Alrighty, Nike. So Nike CEO John Donahoe is out, replaced by the company veteran Elliott Hill. Ooh. Nike on Thursday announced that its CEO John Donahoe is stepping down after the company veteran Elliott Hill is coming out of retirement to take the helm of the sneaker giant. Donahoe, who has been Nike's CEO since January 2020, will retire from his position on October 13th, so coming up here really soon. Hill is slated to take over the following day. Donahoe will stay on as an advisor through the end of January. Quote, I am excited to welcome Elliott back to Nike. Given our needs for the future, the past performance of the business, and after conducting a thoughtful succession process, the board concluded it was clear Elliott's global expertise, leadership style, and deep understanding of our industry and partners, paired with his passion for sport, our brands, products, consumers, athletes, and employees, make him the right person to lead Nike's next stage of growth, said Mark Parker, Nike's executive chairman. So this is Mr. Hill here, okay? So he's coming out of retirement. He's not the youngest person, I'll just be honest about that, certainly. Hill, who is currently based in Austin, started at Nike as an intern in the 1980s. So he has seen Nike's Nike going from this small niche brand into this massive global, one of the most famous, one of the most valuable, successful companies in the history of mankind, right? He's seen it all the way, which is incredible. He joined Nike as an intern in the 1980s and first became interested in the company after writing a paper about it for his marketing class in graduate school, according to an interview he gave in 2020. Over the course of 32 years, Hill worked his way up the chain before becoming president of the company's consumer and marketplace division, where he was responsible for leading all commercial and marketing operations for Nike and the Jordan brand. He is known to be well liked among employees before retiring in 2020. So people like this guy, okay? You know, that's an incredible story, obviously, starting as an intern, and now he's, the CEO of the company. Like, that's definitely, a pretty special story. And if there's one guy that definitely gets Nike, understands how Nike got to this place, where it's one of the most successful companies in history, I think this man definitely understands that, right? He's seen it all in regards to that. Now, what's my opinion on this? I 100% trust Phil Knight, and I 100% trust the board of directors in regards to this. The great thing about a company like Nike and buying into these sorts of real quality companies is you got to understand, when you buy into these sorts of high quality companies, their board of directors are phenomenal. Their board of directors many times have been executives either at that particular company or at other major companies. So they have a lot of expertise, a lot of business, knowledge that they can kind of see, like, okay, this guy's not quite working out. We gotta make a decision here. We gotta make a move on this. And here's somebody to replace them, right? And so board of directors don't always make the right decision, but over time, they tend to make the right decision. That's how these companies stay on top generation after generation, decade after decade, because the board of directors, if they make a decision on a CEO and it's not quite working out, they move on from that, right? And they go ahead and they pick somebody that's high quality. And you got to keep in mind, how many Nikes are there? These are a very special company. And so there's a lot of people that want an opportunity like that. So overall, I trust the decision 100%. And this reminds me very similar. Do you guys know what stock this reminds me a lot of? Nike? It reminds me a lot of a stock I was buying heavily early this year into last year. And you know what stock that is? It is PayPal. Oh my gosh, does this remind me of PayPal? PayPal. What did I always tell you guys about PayPal, right? I said PayPal was a broken stock. PayPal was not a broken company. And you have to differentiate between a broken company and a broken stock. A broken company is one where, the business model is completely going down, revenues are heading down big time, the profitability is heading down big time. It's in a tough place. Maybe they've been disrupted in a massive way, and it's hard times. That's a turnaround. A broken stock is at a company where the stock price, let's say, is going down, down, down. But you look at the fundamentals of the company, like everything's still there. And this is what I saw with PayPal, right? PayPal, the fundamentals of the company were still there. It needed some tweaking of the business model. It needed to innovate quicker, right? Like an incredible employee force there. They got to just move faster. They need a CEO who would move the company faster. And then they need a CEO who would get investors on board to understand, like, this is a big opportunity. Like, here's where we're going, and those sorts of things. So PayPal brings in Alex Chris. Completely is changing the game. And now you see, it seems like every dang week there's a massive announcement with PayPal partnering with this major company, Shopify, Amazon, everybody, right? And he's completely changing the trajectory of how fast PayPal's innovating, right? And he's completely changing the trajectory of like how people view the stock also, how investors view that stock. And so, my opinion is Nike's a very, very similar situation that PayPal was in. And it's a broken stock. It needs fixing in regards to stock price, and they need to innovate faster and just move faster. And so this gentleman that's been there since the 80s, I'm hoping he can go ahead and get it done. And I got to say, I got a lot of faith in him. He's done a lot for Nike, obviously, since the 1980s. And I would say he's probably one of the most instrumental people to Nike's success over the past several decades, outside of maybe Phil Knight, right? Outside of Phil Knight, this gentleman might be the most important person to Nike over the last several decades. And so now, obviously at Nike, we do need somebody that's going to be like the long-term CEO, because this man's coming in. I'm sure he's going to get the innovation going back fast. He's going to get the company running lean and mean. He's going to get the culture right. He's going to do all those sorts of things. But he's not like he's a spring chicken, no disrespect. And so he's not going to be able to run this forever. He's maybe a 2 to 5 year CEO. Maybe he's in that position 2 to 5 years, get the stock back in the great place again, get the stock back to 150, 200, get the company's revenues going back in the right direction, the earnings per share flying high. Then, hopefully at that point in time, we can find more of a longer-term CEO to run the company for the next 10, 20 years, right? Because that's what we need to do next. So, steps in the right direction. I'm happy to see it in regards to Nike, okay? Alrighty, so now let's look at the public count. Let's talk about how I feel about the positions in the public count going into what we're going into now, which is a rate cut cycle, okay? So, this is a full public account here. Obviously, Meta's the biggest position. We're up 371% on that one. Tesla, my Tesla. So I sold another 100 shares of Tesla here today. My plan is to sell around 100 shares a week for the next several weeks. I've made a final decision. I want to get the position down to 1,000 shares. 1,000 shares is where I feel comfortable in regards to Tesla holding in this particular portfolio. So my hope is Tesla stock keeps kind of flying into 1010, right? And I could just kind of sell 100 shares a week, like next week, the week after, right? Until I get down to 1,000 shares. And then the 1,000 shares I feel comfortable holding long term. And that will put my position sizing maybe down to about 10% of the portfolio or so, which is where I would feel comfortable holding Tesla, those shares for the long term. So that's what I'm hoping to do there. I bought Nike stock here today, right? I bought Cheesecake stock here today. So, Nike's obviously going to be up pretty big tomorrow, which I don't like. I'd rather buy Nike shares at $80 rather than $88. So we'll see. I might go green on the Nike position tomorrow. We'll see. I bought Cheesecake today. I bought Estee Lauder here today as well. A lot of these value and dividend stocks are going to remain my focus for this next 30 to 90 days. I feel this is kind of a historic buying opportunity in regards to those sorts of stocks, right? So Meta, how do I feel about Meta going into a rate cutting cycle? I feel great. I mean, the forward P is in a great place with this company. The 2-year forward P, the growth rates look very good. And honestly, the growth rates are beatable for Meta over this next year. That's the other thing. I like the setup for Meta. And so at the end of the day, if your business model, you gotta run ads on Meta. Tesla, I have concerns about, right? After 1010 essentially. And, my two main concerns, I talked about Waymo recently, but there's one other concern I have around Tesla. And this is a bigger concern about humans and people. Here Tesla is in this situation. Model 3 and Model Y already have had, basically Tesla's been doing these incentives that they'll give you these insanely low interest rates if you buy a Model 3 and Model Y. So interest rates going down, at the end of the day, Tesla's already giving super low rates. And yet, even with the tax credit you get on Teslas, even with them bringing down the price so much, even with them offering, very attractive lease terms, even with them attracting these very attractive loan terms, people still choose to buy internal combustion engines. They still choose to go buy a Toyota, a Honda, over a Tesla. And so that's the other frustrating thing in regards to Tesla that I'm like, what's it going to take for the masses to really adopt EVs? And that's another one of my concerns that I'm looking out there and I'm like, we're about to go into 2025 and that people are still just fine with going and buying. I mean, look at the sales numbers. They're proof. People are still fine with just going and buying internal combustion engines year after year after year. And I'm just like, what is going on here, man? When are we going to get on this EV? Maybe the thing we need to really accelerate the EV wave is maybe oil price has to go insane. Maybe gas prices have to go insane to really get people to take this more serious. Because I'm like, with the tax credits, which I don't know if those tax credits are going to last forever, right? With all the price drops Tesla did, with the super attractive lease terms and loan terms, we still are having trouble with the volume. That's frustrating. That's very, very frustrating in regards to Tesla. And obviously the stock's not at the cheapest valuation, right? So, that is what it is. PayPal. So how do I feel about PayPal going in a rate cut cycle? Oh, do I feel good about PayPal? Seeing the way this company's innovating, partnering with more and more companies, trading at this valuation, going into a rate cut cycle, oh, I feel great. I feel phenomenal in regards to PayPal. Oh my gosh, do I feel good about PayPal? Oh, baby, do I feel good about PayPal. Palantir. How do I feel about Palantir? Okay, I got to be honest with you guys. I feel more concerned about Palantir, and if we're just talking about its stock price, right? Obviously, the stock has climbed immensely. We know that, right? It was just, I mean, go back 2 years ago, this was like a under $10 stock, right? $8, $7, $6, those sorts of prices. And, you know, with 37 now, the forward P's pushed up, the 2-year forward P's pushed up. To keep this momentum really going in regards to Palantir, we've got to jump to the 30% revenue numbers. If we can jump to the 30s, we're going to the 40s in regards to stock price. But I am worried if the growth rate decelerates with Palantir, let's say it goes down to 24%, 23%, I think we're going to see the stock fall back down to like a $30 level, like 28 to 30, somewhere like that, because I think that would kind of, I think a lot of people would not be too happy about that, right? So we really need to keep accelerating the revenue growth rates to like the 30s. If we can do that, you'll see a 40 in front of Palantir before you know it. So Palantir's a tougher one. It's a really tough one short term, I think. Amazon, oh man, do I like the setup with Amazon going into a rate cutting cycle, right? I mean, Amazon's just trading. These are incredibly cheap for Amazon. Now, they are going up in regards to how much they're going to pay their warehouse employees. I did see that story here today. So that is something to kind of keep in mind. But we know Amazon just continues to build the AWS business. And we do know Amazon's e-commerce business just gets bigger and bigger and bigger year after year after year after year, right? So the advertising business continues to build out for Amazon as well, which that advertising business is straight cash, baby. Elf on a shelf. So going into a rate cutting cycle, I'm still feeling great about Elf. Elf is one of the few companies that, regardless of how I feel about the economy, regardless of how I feel like what I feel the Fed's going to do with interest rates, I feel good about Elf. It doesn't matter. Inflation, deflation, recession, no recession. I always feel good about Elf. And the reason being is Elf's brand is so great that it really doesn't matter what's happening out there. Like, Elf's going to put up their numbers. The other thing I like is analysts are very conservative with where they see revenue going next year. And that could lead, I don't want to get too excited, but that could lead to major divergence between maybe what Elf is expecting for revenue growth for next year versus where analysts are at. And if that happens, Elf is going to fly. So I'm feeling pretty good about Elf. Cake. Oh, do I love Cake. There's a reason I bought more Cake stock here today, okay? So Cake's numbers have been very good, especially considering their competition is weak. I don't know if you guys saw the Olive Garden results this morning. Olive Garden restaurant sales are down like 3%. So, you know, and I think that's really, I think Olive Garden's slowly getting morphed into kind of like the Chili's and Applebee's type category, right? Because the quality isn't that great. And so it's just more proof that North Italia is going to absolutely take over as that brand expands over this next 10 to 20 years. But here we are going in a rate cut cycle. More and more people are going to look to a stock like Cake. Why? Because the dividends, right? Additionally, if we're talking about lower interest rates, Cake's going to be set up phenomenal. And why? Well, whenever they take out debt to build new restaurants or anything like that, they're going to be able to do it at much lower rates than they've been able to do it at for the last 2+ years, right? So I love the setup for Cake. Love the setup. Revolve going into a rate cut cycle, I like that one as well. Now, the reason I mainly like Revolve, obviously I like the company in general, but the other reason is inflation obviously stopping to slice and dice people as hard. That's going to bode very well for Revolve. I could tell you that much, okay? Nike, I already spoke about Nike, so I don't really need to talk about that one. Planet, I spoke about the Planet quite a bit recently. I love the setup there. SoFi is a special story. I love the setup for SoFi into a rate cut cycle, right? Estee Lauder, love that one. I spoke about that one, I think, on 3 stocks I'm buying or 4 stocks I'm buying recently. So, Fubo, you know, they got the legal situations going on. I'm surprised that one's not stronger, but it's a spec stock. I'm still feeling good about it long term, but we'll see what happens. I hope their numbers are really strong, and then we can, you know, eventually get out of the gulag here. Monster and Celsius, feeling good about both of those. I like both of those stocks a lot. So, and I'm hoping those ones go down short term because I would love to build those into big positions. Right now, they're little baby positions. So, feeling really good about the public count overall. Okay, guys, appreciate you joining me as always. Thank you so much for being here. If you're looking to apply to join my private stock group, get access to 1000xstocks.com, get access to all these different features. You can click on the pinned comment down there, and you can go ahead and fill out a form. We'll get back to you about getting into the private stock group, and you get access to all these different tools. You get access to all my best course curriculums. You get access to see the moves I'm making each week in this portfolio, which I buy stocks in here every single week. You get access to like so much stuff. It's ridiculous, okay? All right, guys, much love as always. Appreciate you, and have a great day.